All right, hey there. Welcome back, everybody. Memorial Day is over. We are one day almost into next month, right? So I'm Christopher Frakes with Texas West Capital. I'm coming at you live from Bernie, Texas. And man, oh man, we got a lot of stuff to talk about today, I guess. Bitcoin kind of taking off there, catching a lot of people by surprise for some reason. Y'all weren't surprised though, right? Because we were already watching, especially if you were in Discord. We've had this setup going and talking about it inch by inch as it's been moving through there. So definitely no surprise on this, or it shouldn't have been anyway. But, we'll talk about it. Is this the bottom end, or is there maybe a little bit more to go to it? The DXY, is it we getting a dead cat bounce here? We got some further downside with that. We'll kind of talk about that as well. Look at some other charts, as always. Talk about some news. You guys know how it goes. So, hopefully y'all are doing well. Hopefully you've had a great weekend. Hey, listen, if you missed our Memorial Day sale, it is over. It is done. But guess what, guys? We're doing a little bit of a summer sale here as well. So now what we're going to do is through next Monday. What is that? June. Oh, gosh. Let me see here. June 6th. So through 11:59 p.m. Central Standard Time there on Monday, June 6th. You can still get 40% off. It's not 50%, but hey, it's 40% off the annual Tier 3, guys. I honestly don't know anywhere else where you're going to get more educational content. Just educational content alone. Again, the hardest part about coming in and learning to trade, with a lot of the free information that's out there's a lot of good free information, but the problem is when you're coming in, you don't know what the half-truths and outright lies actually are. And that's the thing. So, you can do that, and that's fine. You just have to understand that if that's how you're learning, you're going to have to probably end up losing a lot more money along the way to figure out where those inaccuracies are. We help to bridge that gap there, hopefully get you being profitable a lot sooner with what we do over at TWC. So anyway, we'd love to have you there. You can get us there at howtotradetowin.com. Just go right here where it says join us. Go to Tier 3 on the membership options there, and then go to annual, and it's already in there. You don't have to add a coupon code or anything. If you are a legacy member, though, and you missed out on the Memorial Day sale, don't worry. We've got a coupon there in Discord in the members announcement channel that you guys can use to get your discount on there as well, all right? So hopefully everybody's doing all right. Who's here already? Nay, Mr. Wilkes, first one in. Yes, sir, I am doing great. I hope you are as well. Nevlusian checking back from Spain holidays. Man, oh man, y'all over there in Europe, man, getting all them holidays. I don't know what's up with that. I just work all the time. I don't know. I had the 4-day holiday here. But man, I need a break after that. I didn't really rest. Was out doing a lot, so it's the way it is, right? BR, what's up, man? Michael Williams is here. Mike Slane, Data, Andrew Bennett. What's going on? Chance is here. What's going on, buddy? Will I look at your Discord when you have a chance? Do you mean you sent me a message in Discord? Sure, yeah. If you sent me a message there, yeah, I'll check it out as soon as we're done here. And by the way, I've got lots of messages for people. I will, as always, guys, I'll get to you just as soon as possible. Usually it'll be done today. So, if you had any issues or anything, we can get that all taken care of, all right? Eldo, what's going on? Good to see you. So anyway, guys, yeah, join us here at howtotradetowin.com. We'd love to have you there. Amazing group of people with us. 3 live streams at Tier 3, man. 3 live streams every week. Educational. Mondays are Wyckoff. Thursdays are Elliott Wave. I had to think about it. And Wednesdays are tips, tricks, and techniques. By the way, here last week, and we'll be doing for the next few weeks on our Wednesday Tier 3 streams, our tips, tricks, and techniques streams, we're talking about pure price action, and I'm going over how to use just naked price action, just with the charts, no volume, no anything, and how to understand where to put your stop losses, where to put your targets, stuff like that, just off the price action. So I had a great bunch of positive comments from that last week, so we're going to continue it for the next few weeks. By the way, guys, if you join, you can get everything we've done over the last almost 2 years now, still in archive there. So that's the well over 200 hours of educational content, all right? All right. Hi, what's up, man? Mehdi, what's going on, guys? Good to see y'all here. Yeah, man, I tell you, man, it always seems like when you take the holiday weekend that you need a break from your holiday, right? You need a holiday from your holiday. All right, guys. Excuse me. So like I said, today is the end of the month. End of the day today is end of the month. Monthly candle closes. Look at this monthly candle, guys. Remember when a few weeks back I said we wanted to watch the monthly candle. We wanted to see if we got this potential bullish SFP here, right? The same thing we got on the weekly. We're going to see if we could get it on the monthly because it's, obviously a much stronger signal there, right? Right now it's looking really good. This monthly candle opened up here at 37,640 and 35 cents. Now, I don't know that we'll actually hit that. I don't think we'll actually hit that. I would love to see it, though. That'd be great. But, man, oh, man, this thing keeps closing up here. And we'll take a look at the nearer-term chart here. But, man, oh, man, that's looking pretty so far. I mean, guys, if you look at this on the monthly, this is an ABC, isn't it? So, or WXY, right? But nonetheless, comes down there in 3 waves, finds support there at the S1 pivot. We've talked about it, how it's the 200-week EMA as well. I've shown you that. It's a spring right here below the range low. I mean, gosh, dog, guys, it's a lot of stuff saying could very well be the bottom, right? Look at this spike of volume, this monthly volume coming up here off this bottom here. So through this range here, you've got volume dropping off. And then you get to the bottom here where you get the dip under the rally back up. You get this huge bit of volume. And it's a lot of demand coming up. That's a lot of demand showing up there. So, again, we can't confirm that it's the bottom yet. But I'll tell you what, if we get a breakout here above this swing high right here at the monthly pivot, 48,240, if we're breaking out above that, you better be long. You better be looking long on that. Because there's very little reason, again, 3 waves down, right? 3 waves down is corrective. We should most likely be headed up here at least, up through the R5 pivot at least. So, much to the chagrin of everybody looking for, 20,000 and lower, been holding on, waiting. But guys, come on, man. If you've been doing this for any length of time, or you've been following me for any length of time, we talk about this all the time. We always talk about how they're looking for a lower, and it never gets there, right? Usually, right? Yeah, so I mean, again, the same thing we had over here when they were looking for it to continue down lower. Same thing we have here. Now, remember, on this here, this breakout around 4,200, they said was going to get rejected and drop lower, and then it's 6,000 here. They said it's going to get rejected and hit lower. So there's no reason to believe retail is going to jump in here and get all excited. They're going to say, oh, it's going to get up here and get rejected. And then it's not, and they're going to say, oh, it's going to get up here and get rejected. It's going to keep going, and then they're going to get in. The same way they got in up here, right there at the top, right? So, that's kind of what we're looking at here. I like the way this looks. I got to be honest, guys. I like the way this looks so far. But we do need follow-through. We always need follow-through, right? Mark, what's up, man? He's over in, gosh, where is he at? I don't know, Bali or something? I don't know, somewhere like that. I just saw he posted something. Hank posted something there on Twitter recently, today or yesterday or something. So he's still all right. ARM, what's going on, man? So this is my big thing, guys. This is what I'm watching today as we continue on through the end of the month, right? And so the CME, no different, guys, right? You've got this. Look at this. You got the support right here. And so you got the dip down and rally back up is what it's trying to do. Again, we'll see if we get that follow through up through it. So let's kind of zoom in a bit here. So, the other alternate counts we were looking at, again, the triangle, invalidated and whatnot. Now, remember, I've got this right now as a potential bullish count, right? And so this says, hey, maybe we've got wave circle 3 up here at around 32,889. That's kind of what we're looking for right now. It is possible, as I've talked about, that you remember this wave 4, just because the triangle didn't work out, I said it was possible maybe we had an A and a B and a C, or a W and an X and a Y, right? So wave 4 could actually still be in progress over here. Wave 3 down here. Wave 4 still in progress, right? If it was a WXY, you'd have W here, you'd have X here, and then you'd have A, B, and then you'd be looking for Y up here. So most likely this 32,889 would be the end of that, right? If that wave 4 is in progress. Now, if it's a wave 4, and it's going by this black count here, it would be an A, a B, and a C. And in that case, again, guys, we're looking up here at that 34,000, 34,100 area, what I already talked about. So it's still, the thing is, you don't have to know if this is wave 4 or if the bottom's in at this point, because Same thing I told you down here. We're still going up. In either case, we're still going up. So as you can see right here with this channel, we have this breakout and this retest. Man, I'll tell you what, if you weren't going long on this retest, I don't know what to tell you, right? Now, I pulled back right here to the 1 hour and then rallied back off here. Man, you should have been going long there too, right? So opportunities potentially missed here, right? You break out on some volume. You see how you get a little bit of volume spike right here? Broke out, pulled back, and then rallied up and out through, broke above the swing high there. You should go ahead and be long, right? With the stop loss right below the swing low here. If you didn't and you saw it pull back here to what ends up now being the 15-minute pivot, right? It wasn't at the time, but it is today. But then you see this breaking out again on this big volume like this, volume spike, large candle, man, you should have been long. If you didn't, I guess lesson learned again, right? But there were multiple opportunities here. You could have bought the breakout, you could have bought the retest, you could have bought this retest to go long. There was not a whole lot of reason to not have bought something to go long on that, okay? Now, right here, up in this area, you can see that right here from this wave 4 to this wave 4 kind of area right here, we've kind of got this potential hidden bullish type activity going on here. Not perfect. You know, again, it starts right here on this little black candle where it says wave 2 kind of thing there, and it ends on not the lowest one but the one right next to it. But it shows you that demand is still pushing up. The demand is really kind of taking control there, and then it gives you this rally up here. And so far right now, let me see here, that's 32, 232 and 16, 32, 222. So it's almost reached this swing high up here. I mean, is it possible this could still be a flat playing out? Sure it is. If we get this falling back further here, I'm looking for a target of this area to finish out forward. Be like A, B, and then C. Coming down here is a flat. Should be right around this wave 4 swing low. If we can get and continue up there, then, you know, again, in either case, the target's still going to be that same kind of area, that same kind of 32,889, even if we pull back toward this wave 4 here as maybe some sort of flat and then heading up. Other possibility, maybe triangle. You know, if you can get this as 3 down and then 3 up, and then so you get A, B, C, D, E, you'll get consolidation here. If you can do that, then, you know, wave 4 is going to be a triangle and we'll head up there. So just kind of see what happens here, seeing if we can get some further upside, or if we're going to get a pullback here, and kind of watching that pullback to see if we get in that flat or that triangle for wave 4, or if we're just kind of continue up there and head out. Let me see here. Diego, what's up, man? Only listening on the earpods for the first 30 minutes, riding the bicycle. I love it, man. I love it. All right. But anyway, man, nice. I mean, this is nice, man. Look at this. Nice big bullish move here. Nice big bullish continuation here. Yeah, this is a pretty good little bullish move here. So bullish, bullish, bullish. It just keeps on, you know, kind of rallying up there. So we'll see. We'll see how this works out for us. You know, I look at this. Let me see. No, if this count is going to be correct here, if this is a leading diagonal here, then this can't be an ending diagonal here. I was looking like maybe 1, 2, 3, 4, and then 5, but that can't be. So if this is going to be a leading diagonal, then this can't be. If this is going to be an ending diagonal, then this is probably an extra 1, 2 somewhere in here. And, we, you know, heading up further, definitely much more bullish on that. So, I mean, you know, again, guys, it is what it is. You know, things are feeling pretty good at the moment. I've shown you where you should have gone long on this rally up and through, right? Your breakout here was another area you could have gone long at, the breakout of the range high up here. You see we did that on a large candle spread, large volume. Kind of getting into that. That one and that one. Those two right there. So, I mean, you know, potentially 1, 2, 3, 4, 5 different areas you could have gone long on this rally up here. Okay, guys? So these are the type of things that we're talking about in that that Wednesday tips, tricks, and techniques sessions that we're doing last week and the next few weeks. This is the type of thing I'm trying to train our members in and get them to understand how to look at this. So yeah, I mean, that's kind of where we're at there, guys. Now, you can see that we're on the 1 hour time frame here. You can see that we've got a lot of room here with the Stochc RSI. Let's see here. RSI still is, it's not, you notice here it's making higher highs along with price. So there's no, what you call it there? Bearish invalidation or bearish divergence up there. So, again, still rallying higher. Makes, just perfect sense. It's fine. 4 hour. Now, 4 hour up here, but again, we're not topped out. We pulled back, and now we're trying to cross bullishly and head back up there. We're coming up. If we look at this, I mean, look at this. This is beautiful here, guys. But let's kind of take this out. So here's your sideways, right? You can notice that you've got that volume kind of coming down through it as we consolidated there. And then the volume picked up right here. Now, if you guys are following me here on Twitter, let me show you the chart that I put out there not too long ago. What is this? This was May 26th. I put this chart out, all right? Let's see. You know what? I can do it on the on this browser. I got two different browsers going, so it's not an easy move over onto the other one. Let me see here. Okay. So let's talk about this. So this is what we're looking at here. This was this part right here, right? It said, I like this reaction that posed a possible spring bullish SFP below the range low. Need to see a breakout above 36, 35, 39 there on Coinbase, right? So I was already alerting y'all to this back here on the 26th. If y'all are following me here. And so that has been, that was this point right here, right? This was this push up and follow through, right? We pulled back. Now, I think during the live stream, I think I talked to you guys about it, and I said what we're going to look for is a pullback on lesser volume. So if this is a spring in this range here, if this is a spring, then, on that heavy volume, we're going to look for a pullback to make a lower high on much lower volume. And that's exactly what we got here. Look at how low that volume is compared to what we had at the spring. That's a successful test right there. So if you understand Wyckoff and what's going on there, then there was your cue. If you missed the long here, your cue to potentially go long right here. And again, then you had, your target there of the, descending channel resistance and the breakout and all those fun things. So a lot of possibilities in there, guys, as you're watching this play out. Now, again, 4 hour is pretty overbought here, but it can stay overbought for a while, and it can, you can get a little pullback locally here and then kind of push up again. Let's jump out here to the daily, man. So checking out this daily. Look at that. That is just a pretty daily candle from yesterday, right? But notice we haven't broken out above this swing high up here yet. This is 32,645.40. If we can get a breakout through that on the daily, I mean, you've got, your S1 pivot here. Basically, it's this area right here where these candles split, 34,000. That's basically, if you can get above, if we can pop out above this 32,645.5, I'm thinking that we should probably at least get up here to this candle split up here. And what did I say that was? I think I said 34. It's 32,000, 32,200, somewhere right in there, right in this area. Now, if you can break out through that, then we're looking up here toward 38 and 40. So as I've been telling Discord, this is the big area. If we can pop out impulsively above this 38 to 40,000 range here, that really adds some local confidence to the idea that bottom may be in. So we're going to watch to see if we can do that. Again, we're almost, we're just about topped out here on the daily. We do have a lot of room still left on the RSI, though. Daily can stay overbought for a while. Over here again, same idea. I mean, look at this. We got overbought here at about 47,000 and rallied up to 68,000. So almost 50% higher, And during that time, we stayed overbought until we hit this kind of right around 67,000. And then this little pullback here, I say a little pullback, about $10,000 pullback, was the reset. And then we rallied up higher to finish that up there. So, man, I definitely like what I'm seeing so far, but we need to see continuation on that follow through to get up higher through there, guys. But definitely not looking terrible. Not looking terrible. Let me see here. Nevlusian says, I've seen so many traders on Twitter mentioning the possibility of this being a relief rally. And what's your opinion? It's still heading towards 2022. What's your opinion on that possibility? I mean, sure, it's a possibility, but the problem with people that say that is they're not going long. This is the thing. So remember, guys, I talk a lot about trader psychology, right? That's part of my background, right? Psychology. And so those people that are saying that are the same ones that didn't go long at any, they've rarely gone long since the low here. And it keeps going higher and higher. And so what you should see is those same people should be becoming more and more vocal about how that's going to happen. Because psychologically, they're trying to convince themselves because they haven't gotten in long yet. And they've missed, the rally from the bottom. They missed the rally from, these other lows here. They missed the breakouts. And so most likely what will continue to happen is they'll continue to get really loud as they, if price continues up through here. Now, it doesn't mean they're going to be wrong, but you have to be careful about what people are saying. Remember, most of the people that you guys are probably following online are not real traders. And I don't mean, guys, when I say this, I don't mean it to be rude or whatever. I just mean that's the reality of the situation, right? They're not trading for a living, okay? That's what I mean. They may be goofing around a little bit, a little play here, a little play there, or maybe nothing at all. And that doesn't, it's not that that's a big issue, guys. There's a difference between a trader and an analyst, okay? But a lot of what you find online are just people who think they know what they're talking about. It's the same thing that happened during, during the bull runs, right? All of a sudden, all these people show up, and all of a sudden they're experts, right? And then, of course, they miss the tops, they miss the bottoms consistently, right? They don't get, everything's a guarantee. Everything's, price is definitely going to do this or that or whatever, right? And these are the hallmarks of people that don't really have a lot of experience in the market, which is why you don't see me saying those types of things, right? I'll never guarantee you that price is doing something right. I've always got options. And if you're in this with tier 3 and you attend the Thursday Elliott Wave sessions, you understand why, right? It's the same thing that all true Elliott Wave technicians go through, which is the idea that, yeah, you've got your primary idea of what may be going on, but you have to understand what the possibilities are if you're wrong. So that way you can continue trading in stride, right? Otherwise, if you think, oh, price has definitely got to do this, and it doesn't do that, then everything is shattered. You got to start from zero again and start again, right? And you don't want to do that. You want to be ready, set, to go, right? So yeah. Sunday, what's going on? Good to see you. So yeah, while 22 to 20 is still a possibility, again, and that would be the idea that instead of wave 3 ending here and 4 here, wave 3 ends here and 4 is in progress. And that'll get us move up, that'll get us down. Now, if that's the case, I'll show you exactly where we should likely be looking for targets, guys. Let's say it gets up here. Let's say this is a WXY on wave 4, right? And so maybe it looks like this here. Generally, we're going to look for wave 5 to be around 21.5, 21.6, right around there. If it's an ABC, and we hit up higher here toward this, it'd be a little bit lower there. Right around 21,000, 21,100. Does it make a lot of sense, though? Structurally, I'm not sure that it does. Again, when we look at the large, I showed you the monthly there. You look at the daily, the weekly, the monthly. The range looks pretty good. And so this is the range low right here. And notice we've built support on the range low. So we dip below here with this spring on the large time frame, right? The macro look. Rally back up. And if we look at this, guess what, guys? This thing we call the spring on this range right here becomes the secondary test, or becomes the test of this spring over here. So you've got this large volume, right? Got this large volume down here. And price pulls up and it pulls back. Again, much lower volume. Remember, like we're looking spring on this local range right here? Pull back for that secondary test, lower, higher low there, much lower volume. Same idea here, spring, test of that spring here, higher low, volume on the spring, volume on the secondary test, much lower. And then, of course, volume as it continues to make higher lows here, those volume dropping off until it breaks out through this kind of... I mean, you could even do this, guys. Let me show you something here. You could even do it this way if you want. I'll use this because this chart isn't all marked up. Notice where this volume and price action comes with these large candle spreads, large volume and whatnot. It's this breakout through this area right here. Breakout, retest, rally up, right? So your volume picking up at, again, guys, pay attention where your volume's picking up. This is the CME. Look where the volume's picking up. Low, low, low. All right in here, low and rally, right? Prior to that, the beginning of the range here, as the supply and demand is fighting out over here, you're going to get it at the lows and at the highs, right? But as the range continues to develop, what happens? So now we're halfway, more 3/4 of the way through this range here. Look what happens. All of a sudden, volume's down here at the lows, right? Volume's at the lows. Not much of anything at the top. Volume at, at the bottom here. A little bit at the top there. Big volume at the bottom here. Pushes up, nothing really. Comes back down, picks up again. So as that range develops here, the volume at first is going to be at the highs and lows, and then it just starts showing up at the lows. And boom, breakout and rally. So that's the same idea right here. There's your line right there. Boom, boom, boom. Here's your large candle spread, spike of volume coming up through there. If this is a range right here, this is your jump across the creek. Large candle spread, large volume. Pull back up the edge of the creek. SOS, pull back, continue heading up. So yeah, Ben Lee, good to have you checking in, man. So yeah, again, you always want to pay attention, guys. When price is going sideways, the most important thing you can do is understand where that range is, right? Where this range is. And look at where that volume is coming in. What's going on with that volume? Because at the beginning of the range, most of the time, you're still going to see volume at the lows and the highs, right? So you're getting about halfway through that range or so, 3/4 of the way through the range. Then you should start seeing it either showing up at the top or showing up at the bottom. If it's showing up at the top, it's likely distribution or redistribution. You're going to head lower. If it's showing up at the bottoms, most likely it's going to be accumulation or reaccumulation, and you should be heading up higher. So that's kind of where we're at with this, guys. So we will see what goes on here, but the 1 hour, we've still got some time to rally up there, and we'll see if we can continue this up toward those targets and higher. Once again, guys, as far as this whole thing goes, if the bottom is in, a breakout above wave B up here at 43,109.50. If you're playing the longer time frame, guys, you want more confirmation. That right there is going to be your first real clue that the bottom's in. That's the point it needs, because this is wave Y, which is an ABC. So this is 3 waves. So if you break up from here back above this second wave, that locks that decline into 3 waves. 3 waves is corrective. You should go up. So that'll be your first real big clue there. And then, of course, breaking out through wave X here, same idea, right? Same idea. This is 1, 2, 3 waves. So if you break out above wave circle X up here at 48,240, that should tell you in the grand scheme of things that most likely that bottom's in and you're heading up now in wave 5, right? Wave 3, wave 4, wave 5 still to go. So yeah, I mean, that's what we're looking at. Those are your main areas that you're going to kind of watch, guys. Whether you're trading on the smaller time frames or not, those are the big areas that you want to watch to say with, okay, are we likely or not to continue higher? All right. Let me see here. So that's that. Let's see, DXY. So what's going on with DXY? So this is interesting. It's possible that there's 2 possibilities I'm seeing here for DXY. I'm seeing either this wave 3 is terminated here, or it was this wave 3 that terminated here, okay? So this wave 3 or 1 down here. Now, I've got it with this larger one just because that's the way the count was. If we rally on up through here through 103,931, that's going to suggest that this wave 3 is actually up here. This wave 4 is down here. And we're doing wave 5 of 3 heading up. Or, yeah, I guess that's how it's going to be. So we're 3 waves down, right? So it is possible ABC is done. Now, here's the other idea. If we zoom out to the larger time frame, let's say the daily, right? The daily looks like 1, 2, 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5. So if we break down below here, that means the 3 that I have up there is correct. That degree, right? That 3. But 4 is just finishing wave A. So we'll have the move down, probably to this 100 area. Heck, we might even make it down here in this wick. Though that would be a bit more for that. Let me show you something. Let me kind of make a copy here real quick, so I can draw on here without messing up the chart that our members are looking at. All right. So, again, the ideal here would be that maybe let me see if I can get this here. 1, 2, 3, 4, 5. All right. So that maybe I'm correct and 3 is there, but this right here is only something like 2, 3, 4, 5. And then that would be A, B, C. Not quite that high. Give me a minute here. All right. So if this is 1, 2, and then 1, 2, 3, 4, 5. Let's see here. That wave 3 should be around the 1618 of this, right? It's almost there. It's a little shy. It's a little shy. But close enough to say maybe, okay? Notice how that wave 5 would be right down here in this wick area. Right here at this, see this support resistance right here? Right there is kind of where that wave A would end there on that, right? If this is 1, 2, 3, 4, 5 like this, generally measuring, if the wave 4 is complete here, measuring it, that'll give us a target here of about 100.751 in that kind of area, which is still, still makes sense here, right? Resistance, support, resistance. Pull up there. So if that counts there, then I would be looking for it to be like that. And then retracement wise, the 50% gets you right here. You see this support right here, support right there. So that'd be kind of my thoughts, would be where we'd have there, and then we'd have wave C, which would potentially then reach, no, it's a good place, 98.56 kind of area. Again, notice how it hits right here. See where these candles split? It hits resistance, resistance, support, resistance in that area there. So, we generally look for wave C to equal wave A. So 100%, that's usually our initial target of where it would be. So if we continue to break down from here, I'm looking at, 100.75 and then maybe a secondary target around 100.35 kind of area. And then we'll look for wave B to rally back up to this resistance here, and then wave C to head down lower. Now, those of you that have been asking me for months now, how can Bitcoin continue to go up if the DXY, if the dollar continues to rally, right? And this is exactly what I'm talking about. This pullback in the dollar, especially if we're going to be still coming down, allows Bitcoin to rally significantly. And remember, Bitcoin rallies and drops pretty impulsively most of the time, right? So we can continue to rally this up. Say right here, let's look at this daily here, right? We could potentially see Bitcoin rallying toward the top up here by the time that the DXY finishes wave 4 here. And then the DXY goes up for wave 5. And it's got wave 1 up here because the first wave, the first subwave here, this whole thing is wave 5, right? This is 3, this is 4, and we have 5 up here, right? This would be wave 1 of wave 5, right? So wave 1, wave 2, and back up, right? So wave 1 could theoretically complete with the DXY finishing this here. DXY rallies up for wave 5. We could finish, you could pull back for wave 2 here of 5. And then, now, by the way, that on the DXY, this right here, rallying up here, I think that would be 5 of 3, I think is what it would be. I don't remember where I have it here. Let me see. Yeah, see, this would be wave 5 of 3 of 3. So you see, you can have this continuation pullback rally moving back and forth between Bitcoin and the DXY. So moving back and forth between risk off and risk on as it moves up. So, it's quite possible. We'll see how it plays out. But right now, it's kind of the thing I'm looking for with it. So, again, either this is the interior wave 3 of 3. So 3, 4, and then 5 will be 3. In which case, this is likely the bottom here, and we'll rally up and continue up. If we pull back and drop down below, that suggests that this 3 is here, and this is only working on wave A. We'll have wave B, we'll have wave C of 4, head up there. Okay? So, right now it's just, again, it's just kind of this bigger count here with everything, and just trying to figure out where exactly we may be with that, because there is some possibility, because this extension here, this move up, guys, that I was talking about back in, right here. Back in January of 2021, when I told you I believe this was the bottom here. Y'all remember that, right? This has been such an extensive move up. But if we look at this, we go 1, 2 here. And so, the question is this 1, 2, 3, 4? Or again, is this 1, 2, 3, 4, 5 to give us a 1, 2, 3, 4, 5 kind of thing? And that's what we're looking at there. I'll probably have to go in, if you're in Discord with me, I'll probably have to go in there and look at that count sometime here in the next week or two and maybe clean it up a bit because we've had so many overlaps and whatnot going on here just to see if we can get a cleaner count. But what we're kind of looking at these larger kind of areas along the way to get a better idea. Like if we look here, we can go, okay, well maybe 1, 2, 3, 4, 5, right? If that's the case, then 1, 2, 3, 4, 5 potentially, right? And so you kind of back into it. A lot of possibilities, but we'll just look locally and say if we get that breakdown, we'll look for that lower target and then see if we can get that rally up to this area here and then the break back down. And then we'll know at that point that it's one of the larger macro counts, that it is the 3 and the 4 of one of the larger counts. If we just go from here though, this 3 to 4 is a short pullback. It's not very deep at all, about 5%, 6%. By the time we get down here, maybe 6 or 7%. And so that would suggest that it's more of an interior, a deeper interior wave forward, like I was just talking about, which gets our macro 3s up here more in progress, okay? So that's what we're looking at. And so this is important, if you're trading currencies, really. I mean, the DXY is most important if you're trading currencies. Again, guys, it's not that legacy market and Bitcoin, everything moves in response to the dollar. Everybody's so brainwashed in thinking that's what it is. But what you need to think of it about is it's just different ways of looking at risk, okay? And each market shows how much that market believes risk on or risk off may be. So your dollar and your legacy and your crypto are determined upon that market itself, not on extraneous markets. It looks a lot of times like there's correlation, like things are going on. But that's really usually the correlation comes from the stronger, for the markets that have been around longer. So you can look at your legacy and your dollar, and it looks like it correlates because they've been around longer. And so generally your risk appetites are about the same, right? But they're completely different markets. Remember, why are people buying the dollar, guys? Why are people buying the dollar? Because it's the best thing going out there compared to the other currencies, right? Really much more hawkish than everybody else, right? So hawkish means higher interest rates, which means you can lend it out for more, which means it's worth more, right? But you also have to think about the fact that 60+% of the world's debt is in US dollars. And debt in US dollars is required by law to be paid in US dollars. So if you're holding US dollar debt, if you owe US dollar debt, if you're a country or a large corporation, multinational corporation or something, you have to pay back that debt in dollars. So as the value of the dollar rises, it costs you more to pay back that debt. And if it costs you more to pay back that debt, then you can't do those things. If you're a country, you have to pull back on your social programs that you do, right? Or your borrowing that you do to finance all this, right? If you're a company and you're paying more on that debt, that gives you less money to use to increase your operations and your production, to buy out your competitors, to do all those things that make you more competitive, right? It's very important to understand, guys. And so the reason for them going up or down are a bit different. I mean, ultimately it's about risk, but what does that risk mean in that particular market? That's what it means, right? And so, legacy may be somewhat correlated with dollar movement because, again, as dollar moves up, your debt becomes more expensive to pay. You can't do those things you can do to be more competitive or to produce more. So you have to start laying off people. You have to start slowing down production, right? And so the value of your company drops because nobody wants to buy into a company that's not hitting its targets, right? Speaking of Target, right? Recently. Does that make sense? So stop being simple-minded when it comes to these things as a lot of FinTwit and crypto Twitter especially want you to be. There's a lot more to it. You have to think, guys. You have to really try and understand why things are doing what they're doing. Otherwise, you're stuck with these silly little sound bites which turn out not to be worth the time they're spent being that you actually say them. And you end up losing a lot of money. Right? So just some things to think about what's going on with here, all right? Again, with crypto, the same thing I keep kind of bringing up over and over and over again is that it's a different market. And in the crypto market, yes, stocks over the last year or two, you had meme stocks, these huge runs and whatever. That's not normal for the stock market, okay? Usually the stock market is more reserved on its rallies and everything, right, in general. Crypto, however, is blatantly just blow it in your face, kind of running through the clouds, right? Or dropping like a rock to the bottom of the ocean, right? So because of that, people still feel like they can go in and become millionaires overnight, which means their appetite for risk is going to increase. And I think that those who are in legacy markets, maybe younger, and looking for somewhere to put their money because legacy markets are falling off, I think they may be tempted to add more to crypto because they think still there's that chance to continue making money with that, right? I mean, you got all this money, markets are tanking, what do you do with it, right? It evaporates eventually, when the market drops, but and so they look for a place to put it. So Bitcoin's still new, it's still fresh, it's still cool, right? You can go up there and say boomer, and being acting derogatorily toward others that have been around a while longer, right? It's that whole nonsense, the whole group mindset, right, of crypto. And so, again, crypto can continue to rally into other market weakness because of that. Now, when it pulls back, when it drops off, it's going to drop off, right? Like a stone, right? But it can still push higher. So don't think it necessarily has to turn down just because legacy's turned down, just because the dollar's rallying. If this is Bitcoin, if the count is correct and Bitcoin still maybe it's working its fifth wave right now, right? Then it's got months left until it's done. So later this year, right? And so again, it can alternate with the dollar more or less. It doesn't have to be exact, but more or less. As the dollar rallies, Bitcoin can pull back. As the dollar pulls back, Bitcoin can rally. As they both kind of finish off their moves as they're going there, right? So there's still that possibility, guys. I don't want you thinking, the silliness that there isn't, because again, you don't understand maybe what's going on, and there's so much strength of argument from those who also don't really understand what's going on, right? The thing I've told you guys is a lot of your big money managers, believe it or not, don't know a lot of the really complex stuff. Okay? Your quants understand it a lot more because they're all mathematical based, right? It's all about this kind of thing, right? But a lot of your big money managers that have been successful for decades even don't understand the dollar market a whole lot. They understand enough to make money in it consistently more than not, right? Or to make money in their chosen market with how that affects it, right? But they don't really understand to what extent. That's why you have a lot of them that call about, hyperinflation, all this other silliness, right? They did it in 2010 when QE first ramped up. And of course, Bitcoin, the dollar dipped into deflation during that period, right? A couple of times, like 16 and 19, I think, a little bit. They struggled, the Fed struggled to see inflation at 2%, which is what they were trying to get, right? But yet everybody's talking about how it was hyperinflation. Same thing now, right? Everybody's like, it's the end of the world and everything's going there. Bitcoin's going to take over. And a lot of this is just hopium. Bitcoin's not going to take over as a world reserve currency. Heck, I think Jack just recently, formerly of Twitter, again with Square right now, I think he just tweeted something really ridiculous about when did the dollar lose its global reserve status. It hasn't. I mean, I don't understand what he's trying to do unless he's just trying to get people to notice him. Well, could be, but I don't know. To me, without any more context than that, it just seems like the dumbest tweet to ever do. It's clearly not lost its global reserve status. Clearly. So, the silliness there. Guys, I'm not sitting here trying to always hate on Jack, but man, he said some things last few months that really, I'm just looking going, what the heck? Because a lot of y'all don't have, much understanding of these things, right? And so you listen to him and you go, oh yeah, he must know what he's talking about because he's started these big businesses, right? Guys, people who've started big businesses lose all the time. Think about, what was it called? Arca, I can't even think what the heck the name is now. What was that fund, guys? Archegos, right? Was that what it was? That, Archegos, that's what it was. Again, somebody really big, knows a lot, created a lot of money, right? And totally blew it up. Think of Melvin, capital management, right? With the GME thing. Got blown up, right? So don't just listen to somebody and think, they know what they're talking about because they've been successful for some period of time doing something else. Again, just because you are successful with your company doesn't mean that you necessarily understand economics as you should. Okay? Economics is a very, very difficult subject. And I'm not here saying I definitely understand exactly what's going on. But I can say that my view of what's been happening has been playing out. I sit here, I talk about it every week, guys. I talk about these things, right? So it's not like I'm just saying, just saying it and that's all. This is what you guys have seen me talking about consistently. So, and until something different happens, I'm going to keep thinking that same way because it's working, right? It's making sense. If something different happens, well, then I need to go back and readjust, and I have no problem doing that. If you ever get stuck as a trader or an investor on your mindset and you think that it has to be the way it is no matter what, end of sentence, you're going to lose all your money, guys. Most likely. Always be open to change. Always be open to maybe there's something different going on. Okay? Enron, Mark says, yeah, think about the guys at Enron, right? Big, huge company, knows all this stuff, and big scandal, right? So, yeah. Pay attention there, guys. Let me see here. Let's see. Let's look at some other charts here real quick, guys. What do we got here? Let's take a look here at NASDAQ Composite. Let's see what we're looking at here with that. Okay, it looks like we're popping out a bit higher. So my update this morning, I said potentially wave 2 being done, but if it pops up higher, we're going to look up higher here, right? So we'll look at an initial target here of this kind of resistance support right there. As we do that, so yes, I'm going to change this. Let's see here. If this is right there. Let's see. I can't even get this in here. Zooming in a bit here. All right. So we'll assume maybe this is 3 and 4 right here. This is 5 heading up. It gives us an initial target here of 12,263. 263.70 or so. And then continuation higher, we'll look at this 12,367 area as this wave 2 completes what appears to be a flat correction, all right? Now, this is fine. Again, if we break out here at 12,985.01, that will invalidate that as a flat correction, but we still have all this room here. So right now, we've actually rallied. Let's see. That initial target's going to be right around the 61.8. So the target's right below the 70.5. 78.6 is up here around 12,567, which is this previous area of resistance here, support. So we could even see it continue up through there. What we're going to look for now is we're going to look for a breakdown below this swing low right here. 11,942.50. If we can break down below that, that's going to hint that wave 2 may be complete. And then we want to see a breakdown through, you know what? If we get it through 11,704.92, especially impulsively, that's going to be your first real big clue that wave 2 may be complete. Getting down through wave B here at 11,035 and 69, it's going to add confidence to the account and say wave 3 is in progress. So that's kind of where we're at with that, okay? Yeah, there's always a chance that the NASDAQ or the S&P could hit all-time highs. Sure, new all-time highs. It's always a chance. Right now, it hasn't done anything that suggests it's going to, though. Remember, if we zoom out here to the bigger chart, guys, look at this. November of 2021 here, the end of November, right around Thanksgiving, right before Thanksgiving, is where the NASDAQ hit its all-time high, right? Look at this coming down here now. So, if I look at this and I go, okay, well, looking at this daily right here, it looks like maybe 1, 2, could be a 3, 4, and a 5. So it gives us a 1 and a flat correction for a 2. And then potentially, depending on how you want to count this here, 1, 2, and then 1, 2, 3, 1, 2, 3, 4, 5. So this gives you that 1 that we're looking at, right? So potentially 1, 2, 1, 2 right now. If we break down below this swing low here, that'll give us more likely 5 down. And at that point, I wouldn't even be looking at them making a new all-time high. Definitely not this year, but that's going to really kind of put the confidence in the idea that that tops in. Right now, still basically 3 waves. So here's what you can do. On this rally here, if we break out above this swing high up here, what is this? 14,646.90. If we break out above that, that's going to add confidence to the idea that maybe, just maybe, we're going to get a new all-time high. While we remain below that, though, your overall, your view should be lower. And like I said, 1, 2, potentially, 1, 2, 3, 4, 5. You could still have a 5th wave coming in. But 1 more down gives us 5 waves down and really increases the odds that the top is over here still, where we've got it. Okay? That's the easiest way to do it, especially if you're not that well versed in Elliott wave. So if you break out above here, that suggests that we've probably got a new all-time high coming in. If you break down below the swing low, that adds a lot of confidence to the idea that the all-time high was up here in November, where we've got it. Does that make sense? Let me see here. Yeah. So, again, with that, you're going to have pretty much similar things usually coming with the S&P and the and the Dow, right? So the S&P, these are the E-minis, right? So I still had them looking for a fifth wave higher. Their count is a little bit different. And remember, their top came in up here in January, right? A month and some change, a month and a half after NASDAQ, right? And so coming down again, same idea though. Potentially 1, 2, and then I've got this as a 1, 2, 1, 2 here. So locally, we're looking and going, okay, does it break out above 43.03? If it breaks out above that, then that invalidates this count. We got to look at it a little bit differently. Maybe this is a 1, 2, 1, 2, similar to the NASDAQ. But if we break out above this wave up here, this swing high up here, can't get over there. This is your kicker right here. It's 46.31. If we kick out above that, that suggests it's only 3 waves down. It's corrective, and we still have an all-time high, a new all-time high coming in. Okay. As long as we're below that, though, generally we should be thinking lower, I think. Okay. Dow Jones. Again, and we look at all three because they're 3 different things, right? So the NASDAQ is very tech heavy, very, very tech heavy, right? The S&P is also quite tech heavy, but nowhere near as much as the NASDAQ. Okay, so it's got a little bit some other stuff in there. Doesn't make it as sensitive to tech, but still pretty sensitive. The Dow is much more broad-based, not as sensitive to tech at all. So the Dow many times comes out a little bit differently as you're doing it. And so that's, if you're wondering why would you look at different ones, that's why you would look at different ones. Because they're not the same, right? The Dow, though, swing high up here again, beginning of January, around the same time as S&P, potentially top, right? 1, 2, 1, 2. Same idea, pretty much across the 3, right? So again, like the other two, if we break out above this swing high right here at 35,492 and 22.22, then that'll suggest that we're probably getting a new all-time high incoming. While we're below it, we should look at this as a 1, 2, 1, 2 and see where we're headed with that. Locally here, I had a target right here, which we kind of hit on the 27th there. And then we gapped down today at the open, but then here we are rallying. So we had this initial target. If we keep rallying up, we can look at the 61.8 as the next target, but then I want to look here at the 70.5. And that'll fill in this gap right here. But you notice there's this other gap right up here at 34,799.22. So I wouldn't be surprised to see it continuing up there to fill in that gap. What we're looking for is a breakdown, a nice impulsive breakdown below this 1 hour pivot. If we can get that, that's going to hint that wave 2 is complete. And then dropping through the S1 pivot will be a big clue that it probably is. Dropping through wave circle B here at 31,365 and 59 is going to actually add confidence to count, say that wave 3, 1, 2, Roman numeral 3 is in progress lower. Okay? So, pretty clear validation, invalidation levels, things that are going on there. Not a whole lot that should give you a lot of stress or heartburn and all that. Let me see here. Oil's interesting. Oil, I had to change the count because it's continued to rally. And so things are getting interesting here. So now I've got this count changed as, I had this originally as 1 here and then an A, B, C as a flat, right? But with this rally continuing higher here, I've had to change that. So I've got it as a 1 over here. So 1, 2, 3, 4, 5. And then A, B, and still an ending diagonal for C here. And so with this, again, let me see here. Yeah. So then A, B, C gives you 1, 2, 3, 4, 5, right? So A, B, C is 1, 2, A, B, C is 3, 4, A, B. And it might be done right here. Maybe get a 1, 2, 3, 4, 5 here or something. We got rejected, as you can see right here at this blue supply structure here, right? If it rallies up higher, we'll look for this 78.6 right around the EQ, right around the resistance of the wedge. But what are we looking for? So we're looking for a drop through this wave B at 108.61. That's going to hint that wave 2 may be complete. Dropping through wave 4 here, excuse me, which is 103.24. That's going to be your first real clue that it's done. Dropping down here through wave B support at 95.28 is going to say that wave 2 is complete and wave 3 is in progress lower now. If we break out higher, things get interesting then. If we break out higher, the odds are we're going to take out this all-time high, this 147.27 from July 11, 2008, if we break out higher. But you can see right here, you can see a lot of volume here, right? And even more so right here, though. So if we can rally on through this, that should get us down into this low 80s area. If we can break down through that, mid 70s there, here at the low 70s, you can see how it really kind of picks up there. That's where that volume starts really kind of kicking in. So, I mean, really is not, I mean, a bit of high volume nodes in this area just from this sideways, but the bigger areas are down here, which is where they should be, right? Because that's that wave 4 area. So, we'll see what happens with all that. Wave 3 would be higher up than where I've got it at the moment. But we'll wait and see if we get this breakdown and we do wave 3, or if we continue up then this goes, this is 4, or this is 3, this is 4, and then this is 5 heading up. I mean, it's even possible, I guess, if we do break up here, I think it's possible that maybe we've got an A. Oh, no, that wouldn't be because this goes lower here. I was going to say A, B, C, D. I'm sorry, A, B, C, D, E is a triangle. But this drops below. This would be wave C. It would drop below wave A, and you can't have that. So never mind with that. But yeah, we'd look at this as maybe 3. This is 4. And then this whole kind of rally up there. See how it plays out. All right. LXT, what's up, man? Good to see you. So we'll see if we can get this. We'll see if this is it and continues down here. Or if it continues up. If it continues up, we definitely want to see a rejection here around this EQ ascending channel, or ascending wedge resistance kind of area. Pop down. If we do happen to pop out above it, well, what we want to see then, we should see a nice volume pop above it. If we get that, it'll give us a throw over. But then we should expect to see a strong volume coming in and a slap back down toward the wedge support and lower. If we get a throw over, if it throws over, rallies up strongly through it, it should turn around and rally strongly right back, or decline sharply right back down through it. And that would say that's a throw over. It's done, and we're probably headed lower at that point. Big Vape, what's up, man? Ethereum chart? Ethereum what? Ethereum USD? Let's see what I've got here. I haven't looked at this since Friday. So let's see what we have here now. Man, that stopped right below it, didn't it? Or right above it. 1704.70, 1700, $4.70 above it there. So I was looking at a couple of possibilities here. One is that this is a 1, 2. And let's see here. The other one being that this was a 3, this is a 4 as a triangle, and then we'd have a 5, right? This is so close to this swing low that you could probably say maybe you could work it out. I'm just not such a big fan of truncated waves, but it's so close to it that you could potentially say maybe this is 3 here, and this is 4 as a triangle that I've got done here. So it's A, B, C, D, E is a triangle. And then this is wave 5. It doesn't go below it, but it should. It should. So I'm real hesitant to say that. I'm more liable to look at this as potentially a 1, 2 here. See, if this were to be a triangle, then this breakout here, did we break out above it? Let me see. 2015-05. Okay, we didn't break out above it. Okay. If we break out above this swing high right here, this is 20,020 and 14 cents here on Kraken. If we break out above that from here, then to me that really, I don't even want to look at this as a truncated fifth. I think this is 5 as we've got it labeled here, and then this is 1, and this is 2. We could potentially look at this as a wave B triangle here. So this would go A, and then A, B, C, D, E of B. So you got A here, B here, and then C here. As I've kind of got this right here, right? The range low there. I think that would be the better way to look at it. Or even maybe ABC is a W, and then I've got an X here as I've got it, and then AB, and then C down here. And so it's a WXY as I've got it here. 1, 2, and then 1, 2, 3, 4, 5 gives us 3, 4, 5. See? So be fine there. 1, 2, 1, 2, 3, 4, 5. So this suggests 1, 2. Oop, actually, let me look at this. 1, 2, 1, 2, 1, 2. So 1, 2, 3, 4, 5 gives us 1, 2, 3, 4. We'll get a 5, which will give us a 1, 2, 3, 4, 5 up. So similar to Bitcoin, what I'm looking at for Bitcoin. Potentially what may be going on here. So what we're looking for is a breakout above this swing high right here, 20, 20, and 14 cents. So if we can break out above that, I think that adds confidence, local confidence anyway, to the idea that we've got a 1 and 2. And if this is a 1, 2 here, it's so close to the bottom there. If this is a 1 and this is a 2, that gives us a wave 3 here, just a little bit lower than what I had it because it pulled back further there. Around 24.63.5. And that'll put it right here around the wave 4 resistance. So if the black count's correct and we break out above this wave 4 here, that's going to hint that that the bottom may be in there. That this is wave 4 done, like Bitcoin. And this is the first wave set heading up there for wave 5. So yeah, we'll have to see how that turns out, but yeah. I think again, I would watch just in general your large caps guys like Ethereum and Litecoin and can't even think XRP, stuff like that. I mean, I would generally expect them to move similar to Bitcoin. That's usually what happens. So yeah, we'll have to see. But I don't know, man. I mean, looking in here, I'm zooming into the 1 hour. 1, 2, 3, 4. 2, 3, 4, 5. Yeah, so it could be 1, 2 here, and then 1, 2, 1, 2. See, that could even be kind of a 1, 2, and then a 1, 2 is a leading diagonal. That can be kind of weird. Yeah. So let's stick with the larger time frames looking at that. Ultimately, I want to look at this. I want this 1 hour, 4 hour pivot here to hold ultimately. If we're just trading pivots, nothing else, guys, we've broken out impulsively here. Large volume spikes, large candle spreads, broken out above the pivot, kind of came back, retested it, rallied up to the R1. Generally, we expect to pull back toward the pivot area here and then continuation higher. So if we can get that, some kind of pivot here and then a breakout above that swing high, that adds a lot of confidence to the idea that we're going to continue to head on up, as I was talking about. If we lose this pivot, though, and head on down there, I mean, it's possible that we could get caught in here. But if we lose this pivot, this kind of pivot area, I'm cautiously going to be looking, lower down. S1 pivot first off right there. But potentially, lower because, again, be looking at the idea that this is maybe 3 and this is 4. And then this is maybe just 1, 2, 3, 4, 5. Could be heading all the way down here toward 1355. So we'll just see if we get that breakout, continue higher there. But ultimately, you want to stay above this pivot here. When you're trading pivots, I mean, that's going to be bullish. Pull back to anywhere in this area here, and then rally and break out above that one is usually a pretty bullish event when you're trading pivots. And then we should be looking to rally up through the R5 here in that situation. Well, you know what? This is only a 1 hour chart. We may not get up through the R5, but we'll rally on up through there, up toward that daily S1 pivot, which, by the way, the daily S1 pivot is going to change after the market close today. I say market close after, what is it, about 6.5 hours from now when the daily closes? Yeah. So, let me see here. Yeah, it's 1,700 right now, so 2,400. So that's going to be 4, 5, 6, 6.5 hours. Yeah, 6.5 hours. So, when that happens, your daily pivots will all change. Yeah, end of day, exactly. End of the trading day. UTC here. But we'll see. We'll see if we can continue to get this follow through up there or get a little pullback and then continuation up. But again, the idea being the same kind of is what we're looking for Bitcoin here. And that's the idea that we continue higher overall. Man, that's nice. I mean, even if you guys had just looked at general structure and drawn like a resistance from here to here through, or even from here to here through, I mean, if you're looking at that, a breakout of that, it stays above it. You guys should have gone in and gone long on that. With the target of this swing high area up here, which is exactly where we've hit. Hit right into this wick. There's supply right here. That's why we're getting rejected a bit. Yeah. I kind of look at this and I here on the larger time frame, and I wonder maybe if this isn't a this is 1, 2, and maybe this is a 1, 2, 3, 4, 5 right there. So maybe this doesn't pull it down right here, but ultimately that would just be wave 3, and we'll just look for that continuation up. Again, like Ethereum, we ultimately want to remain above this 1 hour and 4 hour pivot here at around 29,370 or so. We want to stay above that. If we can stay above that, that's great. But in this case, we're already up through the R1 and R2. So most of the time, we shouldn't expect to pull back all the way here to the pivot. Should, right here maybe. 30,144 if it was to pull back deep enough. But, you got this wick right here, so probably around 30,435, 30,440. It's right up here, this previous resistance. That'd probably be a good pullback target if it continues to break down below this swing low right here at 31,195.90. I'd look for probably that. And then secondary is right there at the 3150 kind of area. But ultimately, want to remain above that pivot. If we're coming up from here and breaking down below this pivot, it means we're probably headed lower. And again, that means that this is likely wave 4, and we've still got wave 5 to go, which gets us down there to that 20 to 22,000 kind of area. Make a lot of sense? Or none at all? Guys, you see, trading, man, if there's one thing I tell you about trading, guys, it's that it's all about your validation and invalidation levels and using proper risk management. Now, what is proper risk management? That's something you have to learn. It is something that we teach, right? What are proper validation and validation levels? Again, it's something you have to learn, and it depends on how you're trading. If you're trading with Elliott wave, your invalidation and validation levels may be different than if you're trading, say, on pivots, or if you're trading volume gaps, or something like that. But what I'm trying to get across is you have to understand, however you're trading, that you need to understand how you're trading so that you understand where to properly put your validation and validation levels. Because if you know where to properly put them, then you know where to properly put your stop loss. You should always back into your stop loss, guys. And then from there, you should back into your position size. I know too many of y'all, you get out there and you trade, and you're just like, I'm going to trade this much money. And then you try and figure everything else out. How much you are trading for that particular trade should be the very last thing you figure out. You have to know where your target is, where your stop loss is. You have to know those things before you can even figure, and how much you're going to limit your loss to, right? You have to know all three of those things before you can even guess at how large your position size has to be. How do most of y'all do it, though? Honestly. Position size first, right? You can't do that. That's the last thing you should be figuring out. But see, these are things you don't know. These are things that nobody out there tells you. Right? These are things you can look online, how to do all these things all the time, and they don't go over this stuff. This is the important stuff. Elliott wave, all this stuff is easy enough to teach yourself, but how do you actually trade it? That's the difference. That's, again, that's what we teach. We don't just teach this is how it is. We teach how do you trade it. You can know all day that waves go up 5, pull back 3, go up 5, whatever. But how do you actually trade that? That was the one thing that I had when I first learned Elliott wave as I was growing as a trader. That was my first issue was, okay, well, so I know all these rules and all these guidelines, but so how do I really trade it, though? Same thing with Wyckoff, right? I understand where the volume and price action kind of thing and where these labels go, but where do I actually enter? Where am I invalidated? Where am I validated? What am I looking for? How do I figure that out? That's the kind of stuff we teach about. Let's see here. That 30,700, 31,000 areas, the daily S2 and the 4-hour R1 pivot. Yeah. But for which are you talking about? Are you talking about on the Ethereum? No, you said 30,000, right? Let me see here. My 4-hour S1 pivot is 28,000. Oh, R1 pivot. I'm sorry. R1 pivot right here. Yeah, there we go. Yeah. I mean, just generally looking at this, guys, if I wasn't to worry about anything else, I'm watching for a breakdown below this level. Now, it could just dip and then go. But if we're going to break down below there, my next target area is this area right here. If we lose that, my next target area is this area right here. Everything else aside, volume, everything else, just on the price action, that's kind of where you're looking to go. If we're breaking out above here, I mean, you should be looking higher. Your pivots give you a good general area to potentially find targets, right? Don't make trading more difficult than it has to be. Okay? I think people will get too, I see a lot of these guys up here with these systems and all these things, and, they make it really complicated. Again, now, the shorter your time frame, guys, you're trading 15-minute, 5-minute, 1-minute, whatever, you're going to probably need more indicators and trying to find more confluence among different indicators, because you're looking for very short-term trades, and it's very volatile. There's a lot of noise at those very short-term trading things, right? Elliott Wave International teaches the Dick Diamond method, what he did for his 40-plus years of trading. And And he traded those very short 2-minute time frames with his, and it was a good way to understand that. If you don't understand that, it's a good way to understand it. But definitely, the larger your time frames goes, the less complex it should be, because you're getting much more general the further out you go. If you're getting very small time frames, you have to get much more specific, which is why you might end up using multiple indicators and looking for multiple areas of confluence. But as you're getting the larger time frames, that's why I tell you guys, man, the newer you are, the larger your time frame should be daily. And you're like, oh, but I'm going to lose. I'm not going to make all this money. I'm going to miss all these chances. Well, the likelihood is that if you don't really know what you're doing, if you're new and you're trying to trade those short-term time frames, you're going to lose all your money. So you don't want to take the larger time frame because you're worried you're going to miss all these little moves. But the reality, guys, I'm being honest with you, the reality of it is, if you're newer to trading and you're trying to trade those little moves, you're going to lose all your money anyway. So would you rather take a longer term trade with more wiggle room, less noise, more chance that you'll be right and make money? It'll just take longer to do it. Or would you rather try to trade those very little time frames and lose money consistently over and over and over again, which then brings out all your other issues, your revenge trading and your negative mood and all these things that really, emotions that really kind of affect the way that you trade. Think about that. Nobody tells you that, do they? Be honest, guys. Nobody out there is telling you this stuff. This is the stuff that matters, though. Y'all think that what you want to learn is how do you count Elliott waves, how do you use pivots, all these things. And those are great things to learn. But the thing that's going to make the difference in whether you're successful or not is, do you have the psychological side figured out? Do you have the emotional side figured out? Because if you don't, doesn't matter what you know on all this. Again, you'll struggle with actually implementing it correctly. From, well, okay, I understand how this is, but how do I actually trade it, to, well, I know I should do this or here, but oh my God, my emotions are here and I need it to do this or that. See what I'm saying? This is the important stuff, guys. This is the stuff that's going to make a difference, whether you're a successful trader or not. I think I can probably move this 1, 2, 3, 4, 5. I can probably get this as a leading diagonal here. And then nice big move up. That's a wave 3 back. And then we'll see if we get, maybe this is wave 1 of 5, which could get us up even toward this R3 pivot in the 1 hour. Let me see here. But yeah, guys, so that's, again, this is a lot of the stuff I cover in TWC. It's also something that I have decided this year to put a lot of extra emphasis on. So if you're in Tier 3 with us, you're going to see, as we get on going here, you're going to see a psychology area in Discord. Where we're going to really delve into a lot of these things a lot more so you can understand the psychological side of it. Because it really is the most important thing. If you can't do that, you can't do proper risk management then, and you're just going to lose your money, guys. It just is the way it is. And if you're here, I assume you're serious about learning to trade correctly and profitably and consistently, which means these things are of the utmost importance to understand and to recognize and to know, okay? Yeah, exactly. Mark says, you might know the answers, but when it's your dollars on the line, the pulse rate increases, the reality sets in, completely changes the game. Yeah. That's why you have to get this understanding of what's going to happen to you as it goes through, right? If you're in the military here in the U.S., depending on what you do, you might go through training that that really stresses you through the limits and tries to show you what it's going to be like when maybe you're pulled, maybe you're on the battlefield and they take you as a hostage, right? Take you as a prisoner of war. And then they, try to get information out of you, right? And so your emotional state, your psychological state, all these things are going to connect to kind of either increase the odds that you're going to tell them what they want to know as soon as possible, or, make it so you hold out a little bit longer, right? Eventually everybody says something. I mean, that's pretty much the understanding, right? But the goal is to get you to understand your limits, to understand what to expect, to understand what happens to your decision-making process when you're placed under stress and you're tired and you're scared and all these things, right? Trading is a lot of the same way, guys. The reason why I talk about the emotion and the psychological side, whatever, is so you get that understanding, so that when you go through that situation, because you're going to go through it before you ever really listen to me, you're going to go through it multiple times. But the goal is to give you an understanding of what you're going to go through. And then when you go through it, you go, okay, yeah, here it is. I see it. Even if it's afterward, you go, okay, yeah, it was there. And it just makes you more aware. Emotions are difficult, guys. Emotions are really difficult to deal with, no matter what it is. But the more you can deal with them effectively, which starts with understanding what to expect with them in those situations, the more successful you can be. Not that trading is anything like being a prisoner of war, okay? But it's the same concept, the same idea. It's for you to understand what's going on with you when those things happen, so that you can notice them as they happen the next time, and you can adjust accordingly. And I'm about to get out of here, guys, but look at this right here. Let's see here. That's a pretty good little... Look at that. EQ works real well as resistance support right there. We got the breakout on high volume. The retest as support. If we can get a rally and breakout above there, I mean, pattern target based on the height of this thing. Let's see here. Yeah, it's going to be right around $725 or so above that point of breakout. So at least right up there around 32,625 based on the height there. But, again, usually pattern targets are third waves. So, but depending on what this is here, let me see. I mean, this looks like potentially 1, 2, 3, 4, 5 waves here. So just to get on with you real quick here, this will give us a higher wave 3 target. Oh, doggone it. Let me do it this way first. We've pulled back almost 50% as it is. I mean, it could be A, B, C right here. Or this could be A, B, and then C a little bit lower here. You can see that that 61.8 is right here above this channel EQ. Right around 31,640, 31,650, right around there. See this odd colored candle right here? We went sideways. So we could potentially be seeing something like that. Let me go ahead and get this off here for the moment. So if this is wave 1 of 5, I mean, this could just be wave 5. 5 waves up is enough. 5 waves up and a breakout above wave 3 is enough. But if we can get a breakout higher from where we're at, man, that would look to get us way up here around 34,220. I don't like that as a wave 5 target for this 1, 2, 3, 4 kind of thing. Oh, now I know why I put this back here, because down at this lower time frame, this would only give us a 1, 2, 3 here. So it has to be here, 1, 2, and then 1, 2, 3, 4, 5. 3, 4, 5. Again, usually the way we pick our wave 5 targets here is we measure out wave 4. And then we look for the 1618. So again, up there around 32,889. So that's generally my target. That's what I'm looking for at the moment. It's possible. It's even possible this could be an ending diagonal here. I mean, this could be an ABC as a 1, 2, and then ABC as a 3, 4, and then ABC as a 5. That could be in the process of painting that right now. So, yeah. So we'll look for this to gather some support around here and then kind of continue up there at least to 32,889. And then beyond that, 34,000 to 34,100 kind of area I'll be looking for. That 1 hour still got some room there, so we'll see. Ben Lee says, so true, it's getting the emotional side of things figured out first. It really is, guys. I know, I know you don't want to. I know risk management is boring and it's not as much fun. And, it means that if you do it properly, you have to have smaller position sizes than what you want because in your head, you're not going to be a millionaire yesterday, But that's the reality, guys. Either you do it correctly and you make money potentially, or you do it incorrectly and you're all but guaranteed to lose everything. I mean, it really is the way it is. The way you come in as a trader at the beginning, almost everything you think about trading is wrong. It's the opposite. Again, it's a lot of the same stuff we cover with TWC there. It's getting you in the right mindset. It's helping you understand that when you first come in, you think the same thing as pretty much every other new trader when they come in, which means that you're not special. But as I always like to say, that's a good thing. You don't want to be special in that way, right? You're thinking what everybody else is thinking. You all are getting it wrong. I got it wrong when I first started because I was thinking the same way. The good part about that is that you can forgive yourself and move on. You have to forgive yourself, guys, when you make bad choices. Not just in trading, just in life. You can't move on. You can't better yourself. You can't leave it behind if you're always dwelling on it, if it's always somebody else's fault. I tell you all the time, the way that you are in real life directly affects how you're going to be as a trader. And if in real life, if you're the type who always believes that you're a victim, that it's always somebody else's fault, then you can never move beyond that. And so in trading, that's really dangerous because if you can't leave a loss behind, because you're going to lose, guys. There's no way you're going to trade and not lose money at some point. You just have to do it properly so you only lose a little bit. You lose it properly, right? You got to understand validation and validation levels. You got to understand proper risk management. But if you can't allow yourself to move on after you've made that loss, you can't possibly do any better as a trader. And these are not easy concepts to overcome, guys, and to figure out. Emotions are very difficult things. All right? So anyway, guys, yeah. So there you go. Listen, I'm going to get out of here. I'm running really kind of late here, but, again, coming back after that Memorial Day holiday there, right? So if you want to join us, we would love to have you there. HowToTradeToWin.com. Go right here where it says join us. Go to Tier 3. Go to the annual. The discount is already in there. Get 40% off, guys. 40% off if you jump in there for a year with us. Why? Because guess what, guys? You're not going to learn what you need to learn in a month. Not in a week, not in a month. It's going to take you time, not just to learn it, but to get it in your head and to practice it properly. So, we give you the ability to do so with us. Chart critiques, all that fun stuff, so you can help understand where you're getting things wrong, help reinforce the important concepts, and move on there. So if you're willing to be serious about being a trader and get in there, we're willing to give you a discount. Jump on it and do it, guys. It's good through next Monday. Other than that, I'll be back on Friday, guys, all right? So I hope you guys have a safe trading week. Just be mindful. Be mindful of what you're doing, how you're going about it, okay? Don't lose money that you don't have to lose. Look for the higher confidence trades. Don't enter just because there's a chance. Understand your validation and invalidation levels. Most importantly, understand proper risk management. That's going to save you from yourself. As a new trader, you're going to lose a lot more money at first. Proper risk management is going to make it so that you survive that and your account grows up. Your account, guys, I'm going to get out of here, but I'm going to show you something real quick here. When you first come in as a trader, this is what it looks like. You're going to lose money at first. You're going to make some wins, but overall you're going to lose money until you finally get everything down and consistent. And then you'll start making money more and more consistently. The problem is most new traders don't ever make it through this because they don't use proper risk management. They lose it all, and they never get to the point here and then here. The only way you can do that is with proper risk management, okay? Most important thing you'll ever do as a trader. Remember, the only thing you control in the market is how much you lose. All right, guys? All right, you guys have a fantastic day, fantastic week, and hopefully we'll see you in Discord with us there. If we do, say hi. But if not, I'll be back on Friday, 11 a.m. Central Standard Time. Y'all take care.